Okay, thank you everyone for coming and participating here. Greatly appreciate everyone's time as we walk through this and during the time that we're talking through that we're dealing with, and just appreciate everyone's willingness to send comments and questions in. We have received numerous questions. We're going to do our best to answer some of those questions and others as we go through the presentation. Just a note that this presentation will be available on our website shortly after the presentation. It takes a little bit to edit it and work through, but it will be up and available on there, as well as several of the guidance documents that we refer to. I would say that we're doing our best to get information out there, but also not recreating the wheel as well. And so we are referencing lots of other guidance that are out there, both from the SBA, the DOL, the U.S. Chamber of Commerce, several other sources that we're using that we're pulling from information on this, but we want to share with you as quickly as possible too. A quick disclaimer that I have to put out there: the information on this webinar is general information and should not be viewed as applicable to your individual situation and your circumstance. We recommend that if you do have questions on your individual situation, that you follow up with either your attorney or your specific accountant here at Intrust or Integrated Payroll. Please also understand that the information we're providing here is extremely fluid. It is changing on a daily basis and often getting superseded. What we present here today may very likely be irrelevant or incorrect tomorrow. As such, please know that if that is only accurate as of today, and that even as of today, the information is our only best understanding based on how we have reviewed and interpreted the information. On that, there is a lot of information that we're going to be presenting. I think one of the things that individuals are dealing with here is information overload. We're going to do our best to skim and hit on this for everybody. And as some listeners are just coming on board, some are just coming on board and really aren't familiar with everything that's out there. Others have read and thoroughly examined a lot of this, and even a few have over the weekend become SBA and unemployment experts on how this is impacting their business or their individuals. And so please know that we've got a wide range of individuals listening to this, and we're going to do our best to hit everybody. Think of this really as us skimming the surface on various programs. We're going to take a slightly deeper dive on a few of the pertinent items and programs that we think are going to rise to the top as critical and key components. But even those, we're only going to be going down a little bit. We could go down a lot further on information, but we have just so much information that we want to talk through that we want to make sure that we can get to everything. I'm going to re-highlight this, that the guidance is not, most of the guidance here that we're going to talk about is not official yet. If anyone tells you that they know a definitive answer, including us, which we won't, but if we know a definitive answer, or someone tells you that, they're probably not correct. And they're probably overstating. Much of the guidance is still to be put in place. The legislation is there, and that was just passed on Friday, but the practical guidance is not. So for example, one of the programs that we're going to talk about is the Payroll Protection Program. Within the specific legislation, it refers to a definition on what is payroll. That definition has not even been written or released by the SBA. And so anyone that tells you and says this is what it is going to be, it's not there yet. We may think we know what it might be based on what they've done in similar circumstances in the past, but it's not there. Everyone is doing their best to get the information out as quickly as possible. But just be cautious if anyone source that you read, anyone you look at, or anyone you talk to, there could be conflicting information out there. What we're hoping to do here is do a general overview. We're going to take the total presentation is probably going to last between an hour to an hour and a half. It may spread almost to 2 hours, depending on where and how long and how many questions people have. We probably are going to limit the number of questions during the conference and presentation that we're going to specifically address, that I will address, just because there is so much to cover. But I thought we'd start with individuals first, so that way that's going to apply to everyone, business owner or not, you are still an individual. And so that we're going to cover those first and how that applies. And that way, if individuals do need to head off or go somewhere else, they can, and they've gotten at least that information. We're then going to move into the unemployment aspect of things, some interim considerations here, specifically related to the Emergency FMLA or Family Leave Act. We've talked about that in the last couple seminars, but want to circle back on a few items. Then we're going to flip into business implications and how it's going to impact your business. And then after that, looking at some planning opportunities and shifting from defensive to slightly cautious but offensive considerations. A few housekeeping items. I'm going to be presenting most of the information today, and then Jeff is on the line as well. He may jump in here or there, but for the most part, he's going to be attempting to answer questions that people pose on the Q&A. You can pose questions in two formats. One is through the question and answer, and one is through the chat option. The Q&A does allow you to be anonymous if you so choose. The chat, anyone's going to see your name, and it could be as well on the question and answer. Again, like I mentioned, I may not get to all of the questions that you ask verbally here, but Jeff will do his best to answer questions throughout the presentation on those mediums. But if we don't answer them, we will get back to you on your specific questions. Also, as a note, there are going to be a few corrections that are interlaced throughout this presentation on things that we presented in the past that we now have further guidance and clearer information on. So for individuals, a few things that we're going to talk about here is the recovery rebate credit. That's the fancy word or the technical term for what you're hearing for the stimulus or the $1,200 or the direct checks or direct payments. It is a recovery rebate credit is what it really is. We're going to talk about that. We're going to talk about some other guidance that came through in the CARES Act and some information. One is access to retirement funds, required minimum distribution impact, some charitable contributions, some deadlines, and mortgage relief. So as it relates to individuals, so here's this recovery rebate credit. The maximum credit is $1,200 for each eligible individual. So it would be $2,400 if you have two, if you're married and filing joint, and then you're going to get $500 for each qualifying child. So I put the numbers on the slide there. So it's up to 150. So up to 150,000, you're going to get the full credit, and then it phases out to 198. 112,000 if you're head of household, phase into 136.5, and then 75,000 going up to 99,000 for the full credit. Now, one of the questions that we get asked quite a bit and walk through here is, what about my 2019 or what about my 2018 or where does it, you know, what if I have specific numbers that are greater than those phase out, or what if I phase out? It's important to know here that this rebate or this incentive here is technically a 2020 refundable tax credit. And that's important in a couple different reasons. One is it is not taxable income. So this is think of it like a refund on your tax return that you're going to get on any other tax return that you're getting. It's not taxable to you. Likewise, it does not impact on unemployment or other factors or incentives that you're getting. So you can be on unemployment and still get this rebate credit as well. Looking through on the credit, what it's going to do and how they're going to work through handing this out, it is their goal to get it out as soon and as quickly as possible. They're first going to look at the 2019 income tax return, and if you qualify for the full amount there, they're going to utilize that. Then they're going to flip to the 2018 tax return, and if you're available for the full credit there, they're going to give it to you. So if you phase out in 19 but not 18, you'll get the full amount, and vice versa. Worst case, you're going to look at 2020 tax return when we file December. So even if your credit right now comes through and is reduced because of 2019 and 2018, if 2020 you would qualify for the full amount, you'll get the remainder of it when we file your 2020 tax return. Another nice little caveat there is if in 2020 is greater than 18 or 19, so your income goes up, the advance credit is not paid back either. So how will you get the stimulus dollars? They're going to use the bank account information that's on your 2019 tax return if it's filed already. So that's the one that they're going to try to push you to utilize. And if you haven't filed, we recommend that you do file to get the information in. If there's no information there, they're going to flip to 2018. If you never have filed, or if you have not filed a tax return for that, the most likely scenario there is you don't need to file one because of your income is being low enough. Maybe you're just on Social Security or other disability. They will also be utilizing those sources, so the Social Security, to send out information. And so if the Social Security has a direct deposit information on there, they will utilize that as well based on what they have for the 1099 SSA. And then if none of those have a direct deposit method that they can utilize, they're creating, it's not up yet, but they have indicated they're creating a website where individuals can go online and submit the information as well. That's the third method. And the fourth, if there's no other information there, they will mail a check. And then worst case scenario, that if they've gone through and they don't have the bank account information, you did not update it, and they didn't mail you a check because they didn't have an address or anything like that, if all else fails, you can get it when you file your 2020 tax return. Some kind of flipping into some more individuals here. So access to retirement plan funds. This is a fairly considerable incentive that's out there, or availability that's out there for individuals as a result of the CARES Act. They've released or lifted the 10% penalty on the early withdrawal for qualified distributions out of retirement plans. I'm going to say this here, and I'm going to cringe a little bit at the same time, because if you're taking access, or you're taking these funds out of the retirement account, you're pulling it at about the worst time possible when the market is extremely low, and you're pulling it out of a retirement account that you may not, there are potentials that you may not be able to put it back in. We're going to go through, there are some that you can, but just do this with extreme caution. So this is meant that if you need the dollars and there's no other way that you can get these dollars, they didn't want to penalize you. So you have the ability to pull out funds from your retirement accounts and not incur the 10% penalty. The eligible individuals also have the ability to take these distributions and spread that income over a 3-year span. So instead of taking the hit all in 2020, you're going to take part of the hit in 2020, part in 2021, and part in 2022. And here's one nice thing about this is that if you do pull it out, you have 3 years to pay it back. So there is consideration there that if you need to pull it out today, or this, in the near term, because of to get the access to funds, it's not like it's unforgived. You can put it back in. Now you do potentially lose the uptick on the market, but at least you can get it back in. And that's very important, because getting dollars back into a retirement account often is very difficult, or virtually impossible. The nice thing here also is that they've expanded the amounts of what you can do. So this is up to $100,000 per individual that you can pull that. And they've also expanded the hardship withdrawals and the loans within 401ks up from 50,000 to 100,000. To qualify for this distribution, the distribution must be from an eligible retirement plan, and I'll go to that in a second. It must be made after the date of the CARES Act, which was March 27th, and then before December 31, 2020. So if you pulled the dollars prior to the CARES Act, that does not apply. You have until December 31 of 2020. And then here's the key, is that it's made to an individual who was diagnosed with the COVID-19, or is a spouse or dependent was diagnosed with that, or, and here's where most individuals are going to qualify, experience an adverse financial consequence as a result of the coronavirus. There's a lot that goes into that. I have not put that in the slide, but if you do feel that this is something that you're going to look at, I'd suggest that you call either Jeff or myself or an accountant, and we can walk through and kind of talk through the implications and what it's going to need to apply for the your particular circumstance. Eligible accounts for this are the individual retirement accounts, or otherwise known as IRAs or annuities, qualified employer-sponsored retirement plans, which is commonly known as 401ks or simple IRAs for your business, 403As and 403Bs, that's if you work for a not-for-profit or a university or something of that nature, and 457B plans. So virtually all retirement accounts. Again, if you have a specific question, give us a call. A few other items for individuals. The required minimum distribution is not in effect for 2020. This is huge. So individuals that were afraid of having to pull the dollars out if they didn't need them, but were afraid that in the past that they would have to take them out when the market is low, you do not have to take them out for 2020. That is very important to know and talk to your financial advisor about. They did add a $300 above the line charitable contribution. I wish they would have gone more than that, but at least we got the $300. And then something that does apply for any or most individuals that have mortgages currently. Talk with your banker or your mortgage individual. Many loans that are backed by Fannie, Freddie, FHA, VA, or rural housing, they have almost up to a year loan forbearance. They're going to usually start you less than that, but they can go up to a full year. Many non-backed by those organizations are also extending. The key there is communicate early and often with the bank on those. Okay, some individual deadlines to talk through here. So we had reported before on this that the federal deadline was extended to July 15. That is still the case. That also extends the deadline for contributions into HSAs, SEP retirement accounts, IRAs. All of those deadlines, which normally would be on April 15th, we got extended to July 15th. Now, just a side note, if you can, you may not want to wait that long because you might want to take advantage when the market is down to put dollars into those accounts, but you do have until July 15th. The filing deadline was also extended, as well as the first quarter estimates. So if you typically owe estimates on March 3rd or on April 15th, those also got extended. Interesting enough, the second quarter estimate, which is due June 15th, is now due sooner than the first quarter estimate. Last time when we presented, we didn't have this information, but the state of Michigan did come out and they also have extended the deadline now until July 15th, as well as cities in Michigan have extended the deadline to July 30th. What this means is individuals do not have to be pressured to file their tax returns if they don't want to. I would suggest still, though, that you do file you do work on your tax returns, just because that way it gives you information of knowing, A, if you get a refund, we can get that processed and to you sooner than later. And then if you do owe, you can at least determine what you are going to owe as well. You don't, just because it's prepared doesn't mean that you have to. You're also going to find that several of these later stimulus dollars that are going to come to a business, they're going to look at individual tax returns potentially as well. So now I'm going to flip over to unemployment here. This is kind of a cross between individuals and businesses because it's applying to both. There is this, and mainly I'm going to focus on Michigan unemployment here, that there is a huge expansion. The governor just announced on Friday that they are expanding and accepting and have got the program with the federal government. Unemployment has been expanded to virtually everybody that is impacted, that their employer is not working. And where that comes specifically in mind is for the self-employed and for business owners. Historically, self-employed or business owners were not eligible to request unemployment, or they didn't make sense to just because of the limitations that were in effect. They is now eligible. And with this, the federal government expanded that up to $600, an additional $600. So in the state of Michigan, the limit was $362 per week. It is now potentially up into $962. There is considerable question out there as to whether that $600 from the federal government is on top of the $362, or if it's limited, and that gets into what the maximum someone's going to get. Is the benefit that an employee is going to get is limited to their earnings or 962, or is it on top of or within? And so that there is that consideration. But if it comes out to be a salary of $50,024. If you made more than that, you're going to get the 962. If you made less than that, there's going to be a difference in how that works its way through. Where that's coming into play is there is a potential impact, and business owners need to be aware that there could be a potential impact on the ability to get workers to come back if the unemployment is greater than what is going to be offered. Again, we don't know on that, and that is still a question, and the guidance is not out there. It's a little bit unclear on what got issued on Friday there. Several of the requirements by the state of Michigan that usually are in play for unemployment, such as the requirement to look for work or the need for an employer to put in there the return date for work, those have been lifted and those are not in play now as well. I do see, excuse me, I do see businesses utilizing the unemployment and the FMLA sick time kind of in this interim period between when the shutdown order kind of came into play and up until there is a comfort level of knowing when the funds are going to come in from the stimulus dollars for the businesses. So there's this interim period, I'm calling it like the April 1st through maybe the end of April or middle of April here. And business owners are having to decide what are they going to do with their employees. Is it going to be unemployment? Is it going to be the FMLA? And so this interim, many are choosing to use the unemployment as the mechanism. And again, that is extended to the self-employed, to business owners. So again, for several of our clients that have single member LLCs, you are eligible. The individuals that have an S corporation, you are eligible. So all of those are eligible and likely maybe more than what the FMLA or sick is. So that I'm going to kind of transition now into the Emergency Sick and Family Medical Leave Act. That was the phase 2 stimulus. We have a whole presentation from last week on that. I do want to point out here that there has been significant guidance issued over the last week related to this. And that guidance did actually contradict a little bit that we talked about last week, as well as provided much clearer information. I would suggest anyone that is subject or looking at this FMLA to go to the DOL website. We'll have that link on our website. They have issued several FAQs that are out there, and those FAQs are very helpful. One of them, though, particularly puts into question as to whether an entity can use sick or an individual can use the sick or sick time if an entity is shut down. So on that, we were thinking that maybe the governor's stay home, stay safe would qualify for a need to be quarantined. The guidance that the DOL appears to have issued is indicating that it is not a qualifying event. So the sick leave would be primarily for those that have COVID or are taking care of someone that have COVID or have received a doctor's prescription or doctor's recommendation to stay home. So it does not apply most likely to the state's mandate to stay home. What they're doing is they're instead pointing that individuals should be put on unemployment instead. So the sick and family medical leave is applying to individuals while they're working, not when they're unemployed. Where I see the Sick and Family Medical Leave Act to really come into play is for employees for companies that are critical, so that are currently still working. Employees still have the right to utilize this. They did come out with further guidance on the exemption for employers less than 50 employees. And if you do have a question on that, let us know. They did give more guidance specifically related to the idea that says if an employee is critical to that critical company, they could certify that the employee must work. And the same can be said for healthcare, and it's a fairly broad term within that too. And then, so talk through. One thing you're going to want to notice is you have to post information out there. So we put a link to this as well. So the DOL came through and they made a, I'm switching it over here. The DOL put an employee rights letter that got put out that you should make available to your employees. So I would suggest that if you don't have this already, that you utilize this and put it up on your site. There are question and answer on the DOL website that tells you how you get that out to employees, including ones that are on layoff or that are already home on emergency sick and family medical leave. One other side note within this that is cumulative, and so if an employee was on FMLA before, it's cumulative inside of the 12 weeks or the 2 weeks. So again, I'm just trying to hit this pretty high level, but if you have questions on it, give us a call. So now I'm going to kind of switch over into the business impact. So the unemployment in the FMLA does apply to businesses, but we're more part of other guidance and other information that went out, and not necessarily the CARES Act. So now it's kind of switching into the business component of the CARES Act. As a note, when I do say CARES Act, that is the technical name of this phase 3 stimulus. And it's shortened and abbreviated into CARES. So if you see and hear that word, it is synonymous with each other. Within the business, we're talking about an economic injury disaster grant. There's a payroll protection program, an economic injury disaster loan, employee retention credit, payroll tax holidays, SBA loan forgiveness, and other items. Again, where I see now is there's almost an overboarding and overloading of information for business owners, that there's just so much information out there. We're trying to pull together that information and not recreate the wheel. But I think as the dust settles a little bit, we're going to find that more and more businesses are going towards just a few of these particular programs. And so I'm going to spend most of the time here talking about those particular programs. Specifically, it's the payroll protection program, and then potentially the economic injury disaster loan. There are those other ones, and I'm going to go through those, but specifically I'm going to say maybe why they may not apply or where they will apply, and they're going to be on much less of an instance overall. So the first one I want to talk about here is the economic injury disaster grant. This is the one that came out earlier from the CARES Act, and it was the one that was businesses were applying directly on the SBA.gov website, the one that everyone got frustrated on. This grant, I do see, you can utilize this grant with the other programs, but it's in conjunction with. So if you get this grant and then you subsequently get the payroll protection program, it's going to decrease that amount. So you can have both, but you decrease them. And so really it's not going to make sense for most business to go for this particular grant. Where we see this grant is if you need immediate need to make it through these next couple days, that's what this is going to go for. But it's going to require you to go through the paperwork twice to get it. So I would imagine most business owners are going to choose to go past this one and go right into the payroll protection program. But on this particular one, the economic injury disaster grant, the grant is available up to $10,000. It's $10,000 quick cash advance, and it's given within 3 days. It's technically part of the economic injury disaster loan that we're going to talk about later, but this is the grant portion. So you won't need to pay it back. One key within this is you must have been in operation as of January 31, 2020 in order to qualify for this. Again, the website is not the best right now. I do see this more as going to be just a complete emergency need here in the very, very short term if you absolutely need the dollars and can't make the float. My observation, I've seen most businesses make decisions of either putting their employees on unemployment or utilizing FMLA or existing sick or vacation times to kind of bridge this gap between now and when the other programs that are bigger are going to come into play. So we've made a summary sheet here. It is available on our website. It was part of the email invite that we sent out to everybody here as well. And the two programs that we think are going to probably be the most utilized, which is the Payroll Protection Program, or the PPP, and the Economic Injury Disaster Loan. Again, we see most businesses utilizing one or the other of these, and then within that, I would expect most companies to really utilize the Payroll Protection Program. This is technically a loan. It's through the SBA, and I'm going to get into the details here, but most employers are viewing this as being it is a forgivable loan. Now there's lots of qualifiers to get to that part, but in a sense, while it's a loan, it is forgivable, and therefore it essentially is going to be in a grant that comes through. So it's dollars you do not need to pay back if you meet the requirements, and the requirements are fairly loose on this. And so we're going to go through what those requirements are. Whereas the economic injury disaster loan is just that, it's a loan as well, but it's a much larger loan, lower rates, But 0% of it is eligible for forgiveness. So it is a loan that must be paid back. These two programs can be both used. That's very important for me to say, that they both can be utilized, but they cannot be utilized for the same thing. So if you use the PPP program to pay some employees, you can't use the economic injury disaster loan to pay those same dollars. It can both be used for payroll, just not the same dollars. And where I see this is, I honestly think that Paycheck Protection Program is going to be the emergency. We need to get things taken care of during this next couple months, up through June 30. And I see the economic injury disaster loan more as an offensive position to utilize some of the actual true stimulus dollars that are out there for a go forward consideration. And I'll get to those here in a little bit. But to go through the details of the payroll protection program, I'm going to go a little bit deeper on this program because I do think this is the one that most business owners are going to be utilizing. But just know here, everything I'm talking about is just hypothetical. It's based on information that we have from other programs, from other banks that are pulling things together. The official guidance is still not come out yet. And so anyone that tells you that they have definitive information on this is not correct. Where that you're going to apply for this loan through an SBA approved lender. So it could be a national company, or I would recommend a local bank here that you work with, most likely the bank that you already have a relationship with. As long as they're an SBA approved lender, they are going to be the ones that are going to be utilizing and putting the dollars out. The best way to think of this program, and if you ask why would they use a loan that they're going to turn around and forgive, it's the fastest and easiest way for the government to utilize existing systems to get the dollars to businesses to be able to pay payroll. That is the fundamental reason what this exists for. And so their goal and the incentive of this program and why this program exists is to get businesses, to have the businesses take the employees off of unemployment and bring them back onto payroll and have it paid. So they're utilizing the banking system to fund the dollars and get them to business, and then utilizing the payroll process to get the dollars to the employees that otherwise would be using the unemployment, because the unemployment industry or agencies is just going to be completely overwhelmed. It's also utilizing and giving the business owner the comfort level of knowing that it might push in business owner to get employees back sooner than what you may otherwise want to do, but knowing that in the end, it's not going to hit you or hurt you. In fact, it's going to help you to get them back sooner. So again, that's the overall purpose of this program. Again, you're going to apply for it through the SBA approved lender, so the bank. The coverage period, and this is going to become very important, is from February 15th through June 30. So expenses that are spent during that period, February 15th through June 30, are eligible for use of this loan, and then in turn will be applied towards whether or not the loan is forgiven. So these loans are intended to cover payroll, healthcare, mortgage on existing loans that were in effect as of February 15th, rent that was in effect from a lease on February 15th, and utilities. Again, the key there is you're utilizing dollars that you may not have otherwise put out. So I'm going to use the example of rent. I recommend that you talk to your landlord or your entity, your own entity, and kind of decide whether or not you're going to pay rent. You may want to talk with them and have the option to forbear, but at the same time, you may not want to, because you might utilize this program and you want to have those dollars. Because oftentimes when you're talking to your landlord, they're just deferring and not necessarily forgiving. So that's what this program is for. The maximum payroll that's covered, and I'm going to get into these details, is $100,000 of annual earnings. And then this is huge with this. The wording on the loan is such that it is the banks are not being required to consider the ability to repay. They don't have to consider the ability to have this loan be repaid. They're almost assuming that it is going to be forgivable, and therefore the owner does not have to sign a personal guarantee or put up collateral. What does that mean? You're most likely not going to need a personal financial statement. You're not going to have to sign on the dotted line along with it. It's at the business level that this is for. So how do you determine what the payroll costs are? And again, these are the numbers that we're using from other examples of what these loans are for, but aren't exact yet. But it's the sum of included payroll costs minus the excluded payroll costs, give you your payroll costs. Well, no kidding. But what that's getting to is the excluded payroll costs would be those that, for example, are wages over $100,000. And there's a couple of other qualifiers that are out there. Again, we'll provide that information if anyone needs it on the summary sheets. I'm not going to dive into those yet because there are a plethora of those summary sheets out there that are available. Many links from our website as well. But what's included? So included in these costs are salaries, wage, commission, similar compensation, tips, payment of cash tips and equivalent, vacation, parental, family, sick leave. Caveat there, not the sick leave under the emergency FMLA. Allowance for dismissal or separation. So you can read these here, but the couple key ones are, it also includes retirement benefits. So if you're matching employer match on this, like say a simple or a defined contribution plan or another type of retirement plan, those dollars are allowed in there as well. And then health insurance dollars are allowed because they want you to continue to offer health insurance during this period too. This is very new in they're considering payroll, if you will, that also allowed are the payments that are made to sole proprietors, independent contractors, and self-employed. Now, one caveat there, it's not necessarily that a business pays those, it's that that end recipient would also qualify for a program like this. And so if you're in the audience here and you're a self-employed individual or you only have one, it's just yourself, you still qualify for this. You still should be thinking this. This is not just a large employer type of program. This is for every single individual that has business income. This is going to be what you're likely going to utilize. And it goes up to $100,000 there. What's excluded from payroll? So compensation of someone over $100,000. Payroll taxes, railroad retirement taxes, and income taxes are excluded from the payroll cost. Any compensation of an employee whose principal residence outside of the United States. And then here's the key, the dollars that were spent, that were given under the FMLA for the Families First Corona Response Act, that's the phase 2. Those are excluded, and why those are excluded is because you can get a credit for those separately. So those are still going to be paid for by the government, but just through a separate program. How do you determine these amounts? The maximum loan here is going to be 2.5 times your average monthly payroll cost incurred during the year prior to the loan. There is some guidance that we're working on trying to figure through, the banks as well, on is that a 12-month historical based on calendar year? Is it a rolling 12 months? Most are leaning towards a rolling 12 months, but that's still unknown. That's something that you're going to probably want to start thinking about is, where are you going to get those dollars? If you're a client of Integrated Payroll, we're working on getting those dollars ready for you or that information for you in a nice report. It's not available yet, but it will be soon. So that way you have it. But for when you're determining this overall program, you can generally come up with it by dividing your prior year payroll times 2.5%. And why that 2.5? That 2.5 is going to come important because you're going to utilize those dollars to pay 2 months worth of payroll potentially, but on top of that, you can do the other allowable costs such as rent, utilities, mortgage payments, and things like that. I've had several people ask, well, what if my business was not in operational in 2019? You still qualify for this program. What they're going to look at is average total monthly payroll costs incurred from January and February as well. If you are seasonal, you can utilize a different period as well. So you can look on the February 15th, the 12-week period starting February 15th or March 1st. Just kind of depends on what's best for you in your particular circumstance. This is a calculation here that employers are going to really want to understand. And this is determining what is going to be forgivable of this loan. So the key here is the assumption is they're going to give the dollars to you, and then they're hoping that it gets forgiven. What's going to determine what's not forgiven is based on the payroll costs during that period, as well as the FTEs that were reduced during that period. So I've put the formula on the screen. This calculation will also be available within the presentation. and get into it. The general gist here, though, is if you bring back and restore your wages back by June 30, so even if it's not all the way back in, but it has to be by June 30, that the reduction is eliminated. So there is some strategies on when you're going to ask for these dollars. I know a lot of business owners are pushing to have this done very quickly. I would tell you that it's not that emergency of a thing. So we definitely want to be talking to our bankers and thinking through this, but also give them time because they're trying to figure it out. But even that, there's going to be some strategy is to say, well, we want to know when we're going to apply for this, because if you only have an 8-week period from the day that that loan is funded. So if you go too soon and the employees aren't able to work yet, or you're not fully back, you're going to be wasting that period of time that you can use this to the fullest extent. We're still trying to figure it out, but if you kind of look at our numbers, we've internally looked at the ideal time to get a loan is probably going to be right around May 5th. And what that does is it maximizes the time of where you can hopefully have the employees back and still qualify for the full amount. That's assuming they don't extend the program. If the stay-at-home order is still in effect on May 5th, I would not surprise me if they try to extend it out a little bit longer. We shall see. But again, the point there is there's an urgency on getting this loan in place, but don't think that the urgency is so immediate. That's why there's this, you have to be thinking as a business owner, there's this interim period here that you have to deal with. How do you stop the bleeding today, tomorrow, this week, next week? But then there's the practical side that this loan likely is not going to be funded for 2, 3, maybe 4 weeks. The SBA is still trying to figure that out. They're going to do their best to get it as quickly as possible, and it's looking to be like it should be a fairly streamlined loan process, but it still has to work its way through. And even if they do get it back, and let's hypothetically say that they have it effective next week, you may not want to have it available next week because that would mean that you're going to have your employees back sooner than you want to. So there's that balance that you're going to want to strategize on that. Again, before I move on to this next one here, I'm going to circle back and say I do really believe that this is probably the program that most businesses are going to utilize. And again, I'm going to say businesses is anyone that had earnings from business activity during that period, and that in and of itself is a whole nother discussion and debates. But don't assume it's a big employer. If you are a sole proprietor, if you're self-employed, if you're a church, that qualifies. If you're a not-for-profit, it qualifies. The application of that does have significant breadth of who applies for that, and I do think many are going to utilize that. One other caveat before I go on to this next one is if you take that PPP program, it does disqualify you from several of the other programs that are out there. So just be aware that it is, because it is such a good program, that they've said, okay, if you're going to take this one, you're not getting all the other ones. And I'll get into some of those ones later, but just know that if you do decide to do it because it is so good, that it does disqualify you from other programs. It is big dollars. It is important to consider when you're looking at it. One other item, I did not have it on the slide, but that loan that would in turn be forgiven is not taxable. So as a business owner, you will get the deductions for spending the dollars, but the income for the debt forgiveness is not taxable. That has very significant implications from a tax planning point of view, because you are likely going to end up with an NOL, and I'm going to get to that in a little bit. But I've been asked, well, what about the profit? What about the markup on these jobs that I otherwise would have? You don't get and don't qualify for any overhead or markup, but what you do as a business owner get the ability to have a tax deduction for dollars that you're not really getting from a revenue point of view. It's big dollars that are coming into play here. Those big dollars are meant to offset what is significantly impacting in businesses, which is this overall downturn in economic shutdown. So it is big dollars, but there are big dollars that are being lost as well. I'm going to shift now here into this economic injury disaster loan. This one here is the other one that I do envision some businesses taking advantage of. You can do both the payroll protection program and the economic injury disaster loan, but you cannot duplicate the use of those funds across those loans. Again, I've said that before, but you got to be very careful on how you're utilizing it. We're even recommending maybe you want to set up separate checking accounts for it or separate bank accounts to really be able to track the separation there. That maybe you'd be going above and beyond, but just be aware that you can't double dip on anything. This one here is more of a loan. It does, you're going to have to show that you suffered substantial economic injury. The guidance on what is substantial economic injury is out there. I didn't recreate it within this presentation, and I think if you are considering this loan, we should go through those. The loan is up to $2 million. It's 3.75% over 30 years. So here's that summary if you look through it. So what can it be used for? Payroll, fixed debts, accounts payable, other expenses that you couldn't pay that were happening here. So this is where I truly think what's going to happen is we're going to use the PPP program to get through the emergency section of it. And then this over here are going to be the things that maybe stroll out more than that, the June 30 period. They're going to be able to get and handle for the come back into it, the time that it's going to take to get business back up and running again. And then you're going to push that over to 30-year period. It also, I think, is going to give us the ability to use it for other collateralized things. So say you want to look at equipment or you want to look at other acquisitions, it might be available for that too. We're still trying to see and read into all of those. This one here, you're applying as of right now through the SBA website. Approval is coming in 2 to 3 weeks, and the funding is several weeks later. So this is not the emergency quick injection. This is going to be more of the stimulus side of this stimulus package. It can be approved solely on the basis of the applicant's credit score or alternative methods to gauge the ability to repay. It waives the requirement for the personal guarantee up to $200,000. If you go more than $200,000 and the business has not been in business for more than a year, there may be some other tests that have to be considered. Again, you need some credit history, demonstrate the ability to repay. So that's where the PPP is going to come in because it's going to be faster and you're not going to look at any of these. Again, I anticipate this being more of a proactive type of loan that can get if the PPP doesn't and isn't utilized all to the fullest extent. You will have a personal financial statement likely for this one. So I'm going to flip over to a few of the others, and I don't want to say, well, they're smaller ancillary benefits that are part of the CARES Act. There's the employee retention credit. So here, key one is this is not available if you took the Paycheck Protection Program or the PPP. It is if you do just the other loan. This one is going to give you a refundable payroll tax credit for up to 50% of the first $10,000 of compensation, which includes health benefits paid during this period. It effectively is a $5,000 per employee benefit. So this might be something that you might look at and say, okay, well, you know what? I don't want to go through the whole pain of that, doing that, either of those other two programs. This is going to be a simpler way to do it. This is more of an automatic process that you're going to get. So I see this being really utilized for individual or for businesses that are more ancillary to the overall. So maybe you work, but you do a side job that this could apply because that side job, you count on it and you were impacted by COVID, but it's not necessarily your primary source. You don't want to go through the whole process of the PPP. I see that as being part of it. And I use the words employee in quotes there because it does apply for self-employment income as well. It is done through the 2020 tax return is where it's going to come, but it's paid via either a reduction of payroll taxes or a reduction of the estimated taxes that come through. So I would caution here, this is one that people have seen of, oh, I can get a payroll or employee retention credit and other things. Again, to be very careful that you don't double do. That same caveat comes for this one here, which is the payroll tax holiday. So this is not allowed if you're getting the PPP loan. And this is the one that there's been a lot of media about, and including what we were hoping it would be, but this has smaller application now, is the ability that you can defer your payroll tax liability until later. So again, if you're taking the PPP program, you cannot utilize this. If you don't take that, then you would be able to defer the payroll tax obligations. But within that, all you're deferring is the employer portion of the 6.2 Social Security. So it's not the employee, it's not withholdings, it's not any wages, and it's not the employee's portion, and it's not Medicare, just the employer 6.2 Social Security portion. And of that, 50% is paid on December 31 of 2021, and 50% is paid back in December 31 of 2022. So there again, it's not a forgiveness, it's just a loan deferral, or I mean, just a deferral of when those payments are due. A few miscellaneous items, and I say miscellaneous and kind of cringe a little bit on it because these have huge implications, but are more strategy and bigger items, I guess, or not as big of an item that relates to cash flow. There's a retail correction. So this applied to it's the technical correction. You may have heard me talking about this because it applied to several of the people that we worked with, that as a result of the Stimulus Act in 2018, there was an error that came through on 15-year, I think, leasehold improvements, that they were not eligible for depreciation because of this technical issue, that they've corrected that and is now able to be depreciated. That does have significant impact for any individual or any business that has done any significant improvements on buildings over the last 2 years. That's going to be big. A few other items, there's the business interest deduction limitation was lifted, as well as the excess business losses. And that's going to apply into the ability to utilize these losses that are inevitably going to come from 2020, and how we get to utilize those. So that'll be more of a tax planning strategies than anything. And you're going to hear more of those down the road, and those will become more applicable as we start thinking proactively versus reactively. I didn't want to even put this on the other section because this is such a big thing. The SBA is put it in there as well, that, and as part of the CARES Act, that any existing loan or new loan that is underwritten by the SBA, there's going to be a 6-month that are paid on behalf of the bank. So this is huge, or I'm sorry, yeah, on behalf of you, directly to the bank. This is huge. So if you have an SBA loan, you have automatically 6 months that are paid for you. At first blush, you're like, well, why would the SBA even do this? Well, the way they kind of step back and look at it is, since they've guaranteed the loan anyway, this is what pushes the business out of bankruptcy, that they're going to end up all these loans back anyway. So they might as well do this process, is really what the back end thinking of this is. But this is huge. So as a business, if you have an SBA loan, the 6 months is paid for on your behalf. So this applies to new loans or as part of this act. It applies to loans already in place, so 504 or 7A loans. And as we shift a little bit into the forward-looking items, any new loans that are put in place, ish 6-month period. There is a deadline out there. But as you start thinking about more proactively and on the stimulus side of this program, there are opportunities here that we could utilize these SBA loans to potentially acquire new equipment, new buildings, maybe even purchase a business that you're looking to do as you're coming out of this, and you might feel that you're in a good position once we determine, where this recession is, and on the way out, I see us being able to really utilize this program as well. Talked a little bit about real estate entities. If anyone got hurt in this overall, not hurt, but not as much benefited through this program, is the landlords or the real estate entities, because if you noticed, a lot of these programs were based on wages, in real estate entities or holding companies oftentimes don't have wages. So a couple of specific things to think about here as the landlord or that real estate entity. Don't necessarily forgive the rent in the coming months, rather make arrangements with the tenant, because the tenant may want to pay the rent as a requirement of the PPP versus just deferring it. So just be aware of that. The EIDL loan is available because that's not limited by payroll. And you would probably, you will be able to demonstrate that, most likely demonstrate that you were impacted because of the coronavirus. If you've collateralized your real estate by SBA, that SBA loan will qualify for the 6-month deferral. And if it's not collateralized by an SBA loan, talk to your bank, and they have other funds that may be available to defer some of the interest or some of the principal payments potentially. So I put that in there because acknowledging that this is a segment of the industry that probably is going to get hit, but there are programs that are still available and out there that are not tied specifically to just payroll that you can utilize. And think of every entity you have. So if you have a holding company and your operating company, that holding company is also impacted by the coronavirus and can then look to apply for its own programs separate from the operating entity as well. So. Okay, kind of looking ahead here a little bit. So I talked a little bit about the extension on deadlines for the tax returns. I would recognize, or I would tell you to think through that you're probably still going to want to utilize and get the 2019 tax returns done, as well as actually the March accounting, because you're likely going to need those tax returns as part of these programs. You're going to want to know how it impacts estimates that are going to be made or not be made. So think about those. Think about whether you're going to, for the 2019, you may choose to look to say, hey, in 2018, I had a dependent, or I didn't have a dependent, now I'm not. And so we want to strategize on whether that dependent would get stimulus dollars or not. So getting that 2019 filed could be important. If you're in that and we haven't done your tax return, please let us know. We are still doing tax returns. We're keeping up as much as we can. We, like you, have also been pushed home and are impacted by this. And so we are maybe a little bit delayed, but we are still doing returns. And if there is an impact on your 2019 as it relates to the stimulus, let us know, and we will certainly do what we can to get that done as soon as we can. It also is important to think through on the estimates, on whether we're going to owe estimates, not estimates. So as we think through on those, many of those programs do and are able to anticipate not paying estimates without penalty if we can know that we're going to qualify for certain of those programs. Looking ahead and thinking strategically, the HSA, SEP, and IRA, the deadline got extended for the 2019 contributions to July. And oftentimes at this time of year, we're only focused on last year's contribution. You may consider thinking about your 2020 contribution. And I know if you're an individual that is, you're impacted by this recession, and this may be the last thing you're thinking of. But if not, utilize this time to think about making a 2020 contribution to get it in when the market is low. So for your SEP or your IRAs. The same can be said for Roth conversions. Utilize this low market to consider doing a Roth conversion. We can talk through those with you in detail. So net operating loss, or NOL, as we look ahead, I know right now we're focused on the emergency and the bleeding and getting the PPP programs out there and otherwise. But because, especially with that PPP program, so it's going to facilitate the likely loss within your business, because you're giving a grant for these loans basically, and you're still spending the dollars, which will then flow through to your business, or from your business return onto your personal, and likely generate a loss. That loss we're going to be able to utilize and either carry back 5 years or look to go forward. And so as we look ahead, I just put a little tickler out there for us to be thinking about. There's going to be a second round of dollars that are going to be available to us because of these losses, and where we're going to utilize and how we're going to utilize those. So looking ahead from a business point of view, again, this is kind of shifting from the defensive to the offensive. Use those SBA loans, either the EIDL or just a straight 7A or 504 to purchase of equipment, buildings, businesses, because you're going to qualify for that 6 months. The forgiveness of loan, the cost of the loan. Otherwise, use this time right now when we're maybe slower to think about what employees could do when you bring them back, because again, those programs are designed to bring them back sooner than later. And so you may try to think about what are some of the things that you can be proactive to use this to get market share that you might not otherwise, because you're going to have dollars and labor there that they're not necessarily going to be turned around and immediately usable. And so what can you use your employees on during this interim period? Thinking, projects that you've wanted to do, doing an inventory, a cleanup of your inventory, cleanup of your shop, things like that. So think today what you can be using those extra labor availability for. Looking way ahead is debt covenants, especially with the PPP program. You're likely to just blow the debt covenants, because of just the result of the COVID virus in of itself. But then further, even if most covenants, if they're designed well, should still encapsulate, even with a downturn, you're going to, in theory, cut costs or do other things. But with this PPP program and the forgivable loans, it's going to drive the debt covenants way out of whack. So start having discussions with your bankers on that earlier and sooner than later. Again, I say it now just as a preemptive type thing. Don't overload them, because the bankers are certainly going to be dealing with these other programs that are more pressing. But I just mentioned here is something to think about. I just wanted to take the opportunity here to thank you for your patience for us as we're working through here. We are still processing the tax returns and payroll, and we will continue to do so. But like you, we're working from home and working through the kinks of what that means. So thank you for everyone's patience. For many of you on the call here, you are clients of ours, and so you know that we do our best to push and get the business returns and accounting done as soon as possible. I'm going to push for the March as well, because I have a feeling that the PPP program and others are going to be looking for March numbers. So getting those in. If you haven't done your year end, let's work on getting the year end done. But yeah, I'm pushing March already, and I think that you should be thinking about that as well. If you haven't talked to us personally, I've done my best to call individuals to think through, talk through on their specific needs, as has Jeff and as has Katie and others at our organization, and Andrew. If you haven't talked to us personally, we want to talk to you. We're here. We want to go through. There's 100% of people are going to be impacted by this, and so we want to talk to you. These conference calls that we're doing here are meant to be just generic in nature, and to kind of just get you to think a little bit on these items and give some general information and guidance. But then think through and then set up a time to talk to us. I'm available. I'm available on my cell phone at the office number. Same with Jeff, same with Katie, same with Andrew, or anyone here. Call us, let us know. If you have earnings from business, either self-employed, S-Corp, LLC, we should talk sooner than later, because these programs are in place and are starting now. And so you should be thinking through these on what one you're going to be using and how you're using it and what you're using it for. We're going to plan on continuing these seminars every Tuesday at 1 p.m. That way we keep it regular. I see us doing, new information that's coming out, further guidance, deeper dives into particular programs. Maybe it's the PPP and some things that people are seeing. Maybe it's the unemployment and some difficulties with that $600 or otherwise. We do plan on having these every Tuesday at 1 p.m. So look back to those. These are all available on our websites, entrustcpa.us and integratedpayroll.us. So feel free to give us a call or look on the website for that information. And just thank you very much. Thank you for attending. Thank you for coming and listening. And again, please reach out if you have questions and anything that specifically you think applies to you. I am going to leave the conference open here for a little bit to attempt to answer questions. And I'm going to try to flip over to see if there's any questions that I can answer in the conference here specifically as well. But thank you for attending, and please call if you have any questions.